Very good. Okay, let me have one last confirmation just in case. Just one quick confirmation just in case to see if I can quickly fix this problem. Again, we are about to get started here. I can see that some of you do see me. I can also see that not everybody can see my screen on YouTube. Yeah, unfortunately, I'm having a little problem there, and we have to start the session, so therefore we'll have to deal with it. The session will be posted, and some of you may have to catch up with the recording. Okay. Anyway, welcome to the session today. Putting on the side a little technology issue here. Today is a longer term session, get together, AutoUFOs, longer term session today. Yeah, a pleasure to get to get to be all together, like the name of the session suggests. Before we begin, my name is Jose Blasco, and we have a quick disclaimer here. So let's go for it. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So we got the disclaimer, we got a little bit of the presentation for today. So it would be time to jump on the chart here and start looking at market opportunities. I would like to briefly take a look at the one we put in place last week. Okay, we have a trade running with Home Depot, and I would like to start the session by looking at it because I am sure that some of you are in the trade, and there may be certain things to address or discuss, or you may have any question. So before we launch the session today looking for market opportunities, we'll talk about this Iron Condor on Home Depot that is working fine at the moment, and one more day to go to get into the weekend. Okay, well, one more day. I mean, meaning today, Thursday, and tomorrow, Friday, and then we'll be in the weekend. Okay. So anyway, just to give a little extra time where the remaining users are connecting with us, I would like to rephrase certain things that some of you may know already. We have a website. The URL is www.tradewithufos.com, and the reason why this is because here on the upper left, we got a get together button, which is the button that you click to be able to access the calendar with the dates for the future events. Okay, so I would like to point at something very specific here, which is we had a session running on February 12. This session has finally been moved to February 13. So keep that in mind. If you were planning to attend on the 12th, it will not be the 12th, it will be the 13. Okay, keep that in mind. And also, of course, if you have missed any of our prior get-together sessions, you can catch up watching the recordings. The YouTube sessions are organized in a playlist, okay? And when you load the playlist the way I'm doing here, it will show you all the sessions sorted by type. So you have short-term sessions, longer-term sessions, and sharpening sessions. We have basically 3 types of sessions, okay? So that way you can navigate through all those sessions in a proper way and find what you need. Also, make sure you are subscribed to the channel. So click subscribe. If some of your friends are attending the get-together sessions, but you know they're not subscribed, tell them to subscribe. And even more important than subscribing, clicking on the bell. Because if you click on the bell, you will also be notified whenever we update videos. Could be educational videos, could be supporting videos, could be example videos, could be new versions of the user guide, anything. So that way you are fully updated. Okay, back to our website, tradewithufos.com. You have the subscribe button here. Question that we get all the time: how do I get the app? Well, very simple. You click subscribe, right? And if you already have an account with TrustStation, okay, if you already have access to TrustStation, you can just click subscribe. Okay, and this will bring you, the moment you click subscribe, bring you to a new page which is the TradeStation App Store, and you can just click subscribe, and that's it. If you want to look for this manually, you can also get into the TradeStation App Store manually and just type UFO on the search box, click the green button, and the moment you do that, magic, here's the subscribe button as well, so you can easily subscribe. A couple of more recommendations, and we begin. We have a Facebook page, which is facebook.com/tradewithufos. Let me put this on the mainstream. Here we go. So you have it on the mainstream. We have this Facebook page. We also have a LinkedIn company page as well. So I'm gonna do the same. I'm gonna add this information on your screen. And the reason why I am pointing at this is because it's important, okay? Because we post many trade examples. We communicate with our users in a way that is basically real time. And if you are connected, if you are following, you click the follow button or the like button in Facebook. So what happens is that you get real-time updates of all those trade examples or any other communication we may need to send to you. That's quite useful, at least I am speaking out of the feedback received from our users, because many users started using the app with certain knowledge when it comes to trading and investing, but maybe there were some lack of decisions about how to do certain things. Okay, so the beauty is that by looking at trade examples from other users, you may identify, ideas of things you may not have thought of yet, or you may find certain answers that may be the answer you were looking for to complete your trading plan. Okay, so those trade examples have been proven to be very, very useful. And there are many, okay, and we post them in a regular basis. So follow us on LinkedIn, like us on Facebook, and subscribe to our YouTube channel. That way we can be properly connected. Okay, we need to be connected real time, guys. Okay, so that's the idea. Anyway, having said all of this, I am now pointing at briefing.com. This is an external website. This has nothing to do with us. It's just a convenient website to look at earning dates. And I'm going to get here into the search section, because here I'm going to be able to type ticker symbols to look for earning reports dates in a minute. Okay. So coming back to the charts, we are now officially beginning the session. If you wish, I gave a little extra time for everybody to be here. Putting on the side the little technology issue with the YouTube channel. Hopefully you guys are seeing me in iZone and also Facebook, okay? And then we'll post the recording on YouTube as well. So what do we have here? Well, we have Home Depot. This is a trade that was taken in our last get together that took place on the 31st of January. And basically in that session, we did an iron condor. Let me write it down here so it's clearer, just in case you were not in the session that day with us. So what we did that day is that we constructed an iron condor, which is a non-directional strategy where we make money as time passes. And this iron condor was using the expiration date of February 15. Okay, February 15 was the expiration date, okay, of this particular iron condor. So the vertical line on the right represents precisely, okay, actually we use February 15. I'm not sure why it's pointing at 22nd. I'm pretty positive that we use 15. So if you guys think I'm making a little mistake because I'm speaking out of my memory, please let me know, okay? But I'm pretty positive it's February 15. So we did an condor on February 15. So let me move this line to February 15. Okay, here we go. That's February 15. And basically what we're saying is that as long as this market remains, okay, anywhere between the yellow box, which is anywhere between the day we took the trade until the expiration date, and as long as the market remains between 191.57, 175.5, well, the iron condor we constructed the other day will expire worthless, and therefore the amount of premium that was collected when the iron condor was sold would be kept as a pure net profit. Okay, so that's the idea. At this moment, we can see that the trade is working well for us. Okay, the market will open in 19 minutes from now, if I am not mistaken. And so basically 207. So we have accumulated a week of time decay, which now makes it, this would end up in a pretty nice situation, because now if you were to be stopped out or you were to use any other contingency measure in case you do reach the blue lines above or below, well, the amount of loss you would collect is much less compared to the loss that we plan on the first day, because of the effect of time decay, the effect of time passing, reducing, eroding the price of the options. Um, uh, Obviously, the ultimate goal is to go all the way to February 15. But basically, as long as we survive today and tomorrow, we are now getting into the weekend. That would be another additional 2 days of time decay. And now, when the market reopens on Monday, so I would dare to say that if you get stopped out anywhere during next week, this is going to be a trade that no matter what is going to be profitable. Okay, because of the time decay. Okay, we need to we need to properly simulate what I just said to find out that what I just said out of experience is correct based on math. But instead of doing it with Home Depot, I will do it with new trades. So that way we can actually execute them as the market opens in 19 minutes from now. Okay. Again, I wanted to start the session kind of reviewing what's going on since we planned this last trade last time, because of two reasons. Number one, because it serves as a good introduction of other trades we're going to plan today if you happen to be new to our get-together sessions for longer term. So as we build new iron condors or new non-directional plays, you can see us do it, and you can understand better what we are accomplishing or trying to do thanks to reviewing this example. And the reason number two why I was reviewing this example is because some of you are in this trade, and I just want to say good job. And let's allow time to keep passing. Okay, and we'll continue talking about this trade. Okay, so anyway, so saving this desktop, I'm just gonna minimize Home Depot. We will not talk about Home Depot until next week. Okay, and next week, so we'll see what has happened. Okay, but for now, that's it. Okay, so let's begin. Let's begin. With the process of planning new trades. Okay, so what I've done? Well, now it's a few weeks that we are doing longer term sessions. I believe it's the whole month of January and this beginning part of February, where every single week we have been conducting a longer term session on top of short term and sharpening. And during the long term sessions, you have seen me all the time run the scanner I have here on the left, where I got certain parameters where we are looking for the stocks with the greatest level of premium. Actually, normally I like to begin with 25. Okay, I like this value to be 25, because that way the scanning process is looking for stocks that are trading sideways with certain level of liquidity, and I'm looking out of all the stocks available in the market, which are, let's call it 9,000 stocks. I am looking at the stocks that not only meet those conditions of trading sideways, but also the stocks that happen to have a decent amount of premium built in the options. Actually, I'm looking at the 25 stocks with the highest level of premium. Okay, and to calculate premium while we wait for the scanner to finish its job, the scanner normally performs this process a little faster. But when I am conducting the session, because I'm doing a lot of streaming video via multiple channels at the same time, so my computer slows down a little bit, so TradeStation takes it a little easy. So we'll be patient here. But in the meantime, let me show you that I am using an indicator that comes by default with TradeStation called implied volatility stochastics. And what this indicator basically is showing you the excess of premium built in the options with the magenta color, and the lack of premium built in the options with the blue slash green color. So when options are lacking premium, it means that they are very underpriced. When options are showing excess of premium, it means they are very overpriced. Well, in this case, we are looking for stocks in the market, and as I said, we're looking at the 25 stocks with the greatest amount of excess of premium. Okay, why? Because an iron condor, a credit spread, an iron butterfly, all those option strategies that are all about selling options to collect premium and then wait for time to decay the options until the expiration date. All those strategies benefit better from this concept if when you sell the options, these options have excess of premium. Because if they have excess of premium, another way to say that is that those options are quite pricey. And if they are pricey, the moment you sell them, you collect that excess of premium. And this is nice because that means that you have sold options and you collected a hefty amount of premium, right? And remember, when selling options, the most you can make is the premium collected. Therefore, you want that premium collected to be hefty, so that way you maximize your profitability. Okay, in this case, I'm shooting for the 25 stocks with the greatest amount of premium. Notice how the scanner gave me 16. Why? Because, well, I had other conditions, like I needed the stock to be trading sideways. There were other conditions, isn't it? And not all those stocks met the condition. Okay, but those stocks starting with Baidu met the condition, and therefore those are the stocks that I'm gonna utilize. I'm gonna activate our beautiful AutoUFOs, because obviously options are great, but if you use the wrong strikes, because you don't know where the unfilled orders are, so you use strikes in the middle of nowhere, right? So instead of using, for example, the 168, you were to use the 170, for example, where the 170 is in the middle of nowhere, the 171. But if you use the 168, that's a good strike to use. Okay, how do you know that? That's the UFOs. 177, 178 is a good strike. Why? Because of the UFOs. If you didn't have the UFOs, you would not know which strike to use, or you would enter the trade at the wrong time, or you would exit the trade at the wrong time. So obviously, like everything related to business, it's all about timing, when to get in, when to get out. And in options trading, on top of that, it also represents which strikes to use, right? So we're going to use the auto UFOs combined with the options, knowing that those 16 stocks that we have on the left, they represent potential good opportunities for us to exploit non-directional trading. One more point, and that is why I got loaded briefing.com on the right part of my screen. So one more point is that let me rephrase myself. One more point is that this excess of premium may have a reason to be, right? So maybe that company is about to be acquired. Maybe that company is about to report earnings. So maybe something crazy is about to happen to the stock, and that's why the premiums are crazy as well. Well, if that's the case, craziness is not a synonym of high probability trades. Craziness is probably the recipe to get in trouble. Okay, so we want to avoid craziness. We want to basically find abnormal situations where we have excessive premium for no reason. That's when you really have an advantage. Okay, so what I'm going to do is one symbol at a time. I'm going to type those symbols starting with Baidu. Look at when is the earnings report for that stock, because if the earnings report is happening too close, then maybe I won't be able to take advantage of this trade. So the next expiration date, it's February 8, and the next one is February 15. Actually, if we were to load an option chain, this would be seen very easily. So let me do that. I'm loading an option chain, loading Option Station Pro. So we'll be able to plan those trades. Okay, Option Station Pro almost there. That's it. So it's loading. Okay, so if I load Baidu, you will quickly see that we have a little problem there. So I'm loading Baidu. Okay, and you will see the problem that we have, and we can see it already actually, is that the next two expiration dates are February 8, February 15, but we just saw that the earnings report is happening on the 14th. In other words, February 8, it's almost a waste of time to check because it's one day to expiration. So that expiration date is, I would guess, very, very, very likely to to not to provide premium enough. Okay. And February 14, sorry, February 15, which could be an expiration date with enough premium built in, well, February 15 may not work either, and we should not use it because we have the earnings report happening right before that. Okay, so we may get in trouble, and therefore it would be better to not to use it. Okay, and this is what I just said. It's 100% right at a foundational level. There will be a time later as we keep spending time together when we do get together sessions. So there will be a time where I will produce variations of some of the rules I am giving you at the moment. Okay, at the moment I'm giving you a rule which is don't use an expiration date that happens before, sorry, that happens after earnings. Okay, use expiration dates that are prior to earnings, not after earnings, so you don't have a reason for the premium to be excessive. Remember, you want the premium to be excessive for no reason. You don't want a reason because the reason, in this case, earnings, would be also the reason for craziness. Okay, so we want to avoid that. Okay, so so Baidu would not be a good candidate. And by the way, TradeStation, like 30 minutes before the market opens, resets the option chain. So you can see everything in the option chain is zero. This is just because the market are about to start in 8 minutes, and the 30 minutes before is a full reset for the majority of brokers out there, and therefore for now we see zeros. Okay, we can still work on planning the trade, so we'll keep going through the list. Okay, and at least work on the UFOs, and 8 minutes from now we will have that on the option chain. Okay, so what about BMY? Okay, what about Bristol Myers? So Bristol Myers has an expiration date, sorry, an earnings date. Okay, the earnings date is um, April 25. So that looks to me quite healthy, right? If Bristol Myers, okay, if Bristol Myers shows a great level of premiums, okay, is one of the 25 stocks in the U.S. market based on the scanner with the greatest amount of premium. Okay, it's taking a little bit of time here. So if Bristol Myers is showing a great amount of premium, okay, and there is no reason for that excess of premium. So that is what I would call a good starting point. Okay. On top of that, when looking at the UFOs applied to the 60-minute time frame of BMY, it's giving us a probability of 57%. I want to quickly check as well what the probability would be if I was to look at pre-market and post-market data. Okay, which is now 43%. So you can see pre and post-market data happens to be much less relevant for this particular stock. So in this case, I will just stick with regular trading hours data, and that's it. Okay. Sometimes you may have seen me in the past in other sessions. You may have seen me rely on pre and post market data, and the reason why was because the statistics provided were similar to the statistics provided during the regular trading hours. But when that's not the case, like with Bristol Myers, then I'm gonna totally ignore pre and post market data and only focus on one more time the the regular trading hours. Okay, so what do we have here? Well, we have here UFOs below, UFOs above. If you were to look at the distance between here and the bottom part of the UFO, and I was to project this to the upside, okay, so that will bring me to this place. Okay, so if we were to do a purely mathematical projection above and below from current price, okay, you could say that by looking at the UFOs below, is looking like this market is not likely to go below 47.58 anytime soon. And the reason why is because there are two UFOs. It's also looking like, if I was to project this higher, that the equal distance will bring me to 54, 66. Okay. The thing is that I got no UFO there. Okay. So um, you know, normally in a case like this, you would go ahead and use the prior UFO, and that would make your iron condor a little bit imbalanced, because the space you leave yourself above before you reach your stopping point is less compared to the space you leave yourself below, and that would impact mathematical calculations like probability of profitability or something like that. Okay, so in a perfect world, you want to do your iron condors where your strikes are equal distance, so you give yourself equal chance above and below to either profit or to lose. Okay, but at the same time, it really doesn't make sense to have this line here at 54 something, which is in the middle of nowhere, just because you want to have this mathematical calculation to be satisfactory and start the trade exactly equal distance between the green UFOs, sorry, the green UFOs on the line below, and the red UFOs on the line above. So you know we have two choices here. Choice number one: accept what is known as a broken wing iron condor, meaning that we may have to use strikes that are not exactly equal distance, and that may imply the widening of the offset units. Okay, if this sounds a little too technical, I will clarify it later. Just bear with me if you are not trading options in a regular basis, and I will explain this much better as we go. Um, Second option, okay, is, even though I said I would not rely on the pre and post market data, well, it's always better to rely on it. Okay, and well, the fact is that I got some on-field orders here at 53.63. So if I go back to regular session, instead of 53.63, actually it's 53.94. Oh, sorry guys, sorry. That was the location, 54.60 something. That was the equal distance. So let me see if we got something there. Now we got nothing. Okay, so we really got nothing, and therefore that line is really in the middle of nowhere. So it's just like what I would call a hopping line. And because hopping is not part of what we do, I'm just going to go ahead and move my line here around 54. Okay, around 54. So basically, this iron condor with Bristol Myers, which we're going to be able to assess in 2 minutes from now, it's an iron condor where I would be buying and selling options above and below. I would be buying calls, okay, selling calls below, and then I would be selling puts, and I would be buying puts below, right? So that is how you build an iron condor. Okay, this is how you build an iron condor. You sell calls above and buy calls as a protection, and then below you do the opposite. You sell puts below, and then you buy puts as a protection. Okay, it's kind of the mirror image: what's above and what's below, above the line and below the line. And you will collect premium from both sides and let time pass. Okay, that would be the goal. So which one to sell, which one to buy? Well, again, 1 minute from now, my option chain will start updating. So let me, okay, the numbers were already showing up. Let me restart the option chain, because I noticed that for whatever reason, my line for me to input the ticker symbol went away. So I'm reloading Option Station Pro. The market just opened. Therefore, now we have market data, as you will see in a few seconds from now. And I'll be able to see if we get paid anything decent for Bristol Myers. Here we go. Okay, so we have Bristol Myers already. So we'll be able to see if we're getting paid something decent or not. Okay, so for example, February 15, okay, February 15 is looking very bad for the 47.5. Okay, and it's looking very bad because of the spread. Okay, and to be honest, that's a little concerning. 54 also a very wide spread. So what if we look at the next expiration date? It should be even worse. Okay, so I'm just gonna forget about it. Okay, and go for the next talk, because normally the monthly expiration dates, which are the ones that are blue color, the weekly are golden color. So the monthly expiration date normally got more liquidity than the other one. So the moment I saw the monthly expiration date showing a little bit of lack of liquidity, this concerned me. Okay, now it is true as well that when the market just opened, sometimes for anywhere between 1 to 5 minutes, options show these pretty crazy spreads. So if that's okay, what I'll do is I'll keep the trade here, and a few minutes from now, I will come back, and we will discuss if in the end we do have liquidity or we don't to do this trade. Okay, but in the meantime, I'm gonna move to CRM. I'm gonna skip CNC because out of experience I know it's not that liquid. So I'm gonna move into CRM. Okay, we know that with CRM we have the same characteristics. Okay, so good level of options premium. Okay, and wait a minute, I didn't look at the earnings report, which is key. So CRM. So February 27, okay, February 27, and therefore we can deal with February 15 and February 22. Okay, so we can deal with February 15 and 22. If we look at the option chain for CRM, we have CRM here on the top. So February 15 got 35% volatility. February 22 got 27. Of course, March 1st got the greatest amount because that's where the earnings reports will take place. Okay, so but we don't want to use that one, as we said, right? So we want to use expiration dates prior to the earnings report. So in this case, it will be 27 or 15, sorry, 22nd or 15. And obviously 15 is the one showing the greatest amount of premium based on this implied volatility value. Okay, here we see a little more reasonable spreads, and so on. Still, some of the strikes are a little wider. Again, probably the process of the market opening, and also Salesforce is not the most liquid stock in the world, but it's not that bad. And therefore, what I'm going to do is I'm going to draw a line from current price to those red UFOs, and I would like to project this to the bottom to find out if we have a UFO anywhere close. Okay, and it seems that we have this one, the 150.74. I'll come back to this. Before I do that, 52.2 is the probability that we have with the regular session market data. If I switch to pre and post market, we got 53.90. So hey, pre and post market data is actually relevant for CRM. Now, having said that, I could, let me see what we have. I could plan on a range of prices. Okay, so I could say, okay, let's be aggressive, right? And if I plan to be aggressive, okay, I'm going to use, instead of the light blue, I'm going to use magenta lines. So I could plan for this distance between the current price and 2 UFOs above, and I could project the same distance below. Okay, so that would be somewhere, something like that, right? And if I was to do that, so I am relying on those UFOs, I am relying on this UFO. What do we have on the regular session? Okay, what do we have on the regular session? Well, on the regular session, we have this UFO right here. Okay, but if I project this to the downside, basically I would end up in this one. And if I project to this one, okay, if I project to this one, well, then now I need to increase the distance of this one, and therefore I end up with this UFO. So no matter how I look at it, with pre-market or post-market data, it seems that the most logical range to trade in this particular case is to have a bet where for a few days, this particular stock will not exceed, okay, those two horizontal dark blue lines. Okay, that way we begin the trade where price of CRM is somehow more or less in the middle. Okay, more or less in the middle. We are more or less equal distance to the points above and below the lines. That proves us wrong. And as long as CRM remains in this range from now until next Friday, um, if we use a February 15 expression, then we would be in a proper trade. So the question is, now that I have shared the rationale of the trade with you, the question is, if I do February 15 and I want to sell the 150 or something like that, do I get premium? Yes, I get 80. If I want to sell the 161, which is going to be 162.5, I get premium. I get 43.50. Okay, so yeah, we have something to work with here. Okay, we have something to work with, and therefore we're gonna be planning on an iron condor. Okay, so I'm just gonna right click, sell iron condor, so I get this on my simulation window. I'm gonna add 2 more price strikes just to be able to adjust the trade. So the one below is 150.67. The one above is 161.27. The current price is the one in the middle last. Okay, so current price 155. Below, let's make it red color, 150.67. Above, let's make it red color, we are talking about 161.27. Okay, so basically this is the plan for the trade. Now when building the iron condor, okay, and guys, feel free. I just started the day and I just went for it, given the fact that we are during market hours, and the idea will be to put this trade at work and profit from it. Okay, so I went straight for it. But you guys feel free to type your questions if you have any question, etc., etc. Okay, so I'm gonna be buying. Okay, a call. Let's call it for now 165. I'm gonna be selling a call. Let's call it for now 162.5. I'm not sure about the strikes, so I'm gonna have to look at it again, and I don't remember by heart. And then below, we're gonna do the 150 put, and maybe we're gonna buy, I don't know, something like the 148 put, something like that. Okay, so let me take a look at what's available in the option chain. I'll make this color dark blue. So in the option chain, we have, okay, on the upper side, we don't have the 161. The nearest is 162.5, and then it's 165. So I kind of did it okay. And in the bottom part, we don't have the 150.50 or anything like that. So we dropped to 150, and then like 2 strikes away is 148. So I kind of got it right. Okay, so let me adjust this and we'll see how right or how not right I got it. So we'll do, let's begin with a call, 165, 162.5, and then we'll do 150, 148. Okay, so green color +1 is buy, red color -1 is sell. So selling the 150 put, this should be the opposite, guys. Sorry, I don't know how I read this. Okay, let me, oh no, I did it right. Yes, I did it right. Sorry, guys. So selling the 150 put and the 162.5 call, buying the 148 put and buying the 165 call. That's the idea. Now, is this correct? Well, let's take a look. If this market rallies and hits the upper line, which means we are proven wrong, notice it's showing a loss of 50. If it hits the bottom line, it would be showing a loss of 30, 32, 35. Obviously, this is moving as the market moves. And notice that is imbalanced. We always want a little bit less loss below, but I would guess there is a little too much loss. So I'm going to try to move this to 147 and see what happens. Well, if I move this to 147, now I got more loss below and less loss above, which means I probably should not do that. Okay. So another thing I could do is, what if I move this to 149? Okay, and now the difference is much, much higher. So conclusion, the way I had it was the ideal way. Okay, 160, 148. Okay, so I got it right at first. Okay, and basically, if you think about this trade, so this trade is a trade that will pay you $58 now. Okay, $58 now. The mid price is 58. Ask is 44, bid is 70. So if you go in the middle, you'll get 50 something. So if you profit, you will make 50 something. And if you lose, you will lose either 51 or 35. But that's today. Because tomorrow, 51 would be diminished by 3. And the day after, maybe diminished by 4. Because theta increases every day. And maybe the day after, diminished by 6 or 7, right? And as time passes, you reach a point where after a few days in the trade, you will have no more risk. Okay. So that's good. Okay, that's good in that sense. Okay, that's good in that sense, and therefore that will make this trade a valid trade to execute. In the future, we will add a few more extra calculations on top of what I just did, just to stack even more odds in your favor. Because now we know the probability from the UFOs, but also something. The UFOs is all about finding on-field orders, but something that the options have is also an expiration date. So the next question is based on speed of price movement, how likely it is to reach 161.27 or 150.67. How likely it is, um, if you were to ignore the UFOs, which you should not, but if you were to ignore the UFOs just based on speed of movement, how much it would take to that stock to reach those points, and therefore how much time decay would be accumulated before you get stopped out. And we can play with all of this in a way. We'll put some rules in place, so those trades become much much more quantified when it comes to the risk and the reward and the reality of the trade. Okay, for now, because we are learning to do this all together and you're learning to use the AutoUFOs, I will just leave it like that, and I will say this trade is valid to be executed, and I will execute it myself in just a sec. And if you feel to do the same, please go ahead. You decide if you want to use paper money or real money. That of course is your decision. But for educational purposes, I just gave you all the details of this trade, isn't it? So again, I'm going to execute it myself. You decide what you want to do in your case, but the idea is, that you get a greater understanding of what this trade can do for you. So as we keep spending time together in those get-together sessions, we will add more and more rules to make the methodology more robust, more mechanical, without any subjectivity. Okay, cool. So let's go for it. Okay, I'm gonna take this trade, and to execute this trade, I will just come in here and select trade. Okay, of course I will need to decide on how many of them based on the quantity, and just to keep it very simple, because this one, the account I'm using here is a SIM account, so I'm just gonna go for the market price, which you should never do. You should always go for close to the mid or the mid to get more premium. But in my case, I'll be happy with 43. So I'm gonna place order, yes, and I just got filled. And now, as you can see, TradeStation is reporting my 4 legs. So I am in a trade. Okay, if I move to manage and I look at my CRM, I can actually drag those options together in a way where actually it shows it's an iron condor, and I can see my legs. Okay, but now TradeStation understands this is one thing. Okay, one thing. You can even come in here now and format the columns and say, hey, I would be interested to know how much money per day I'm going to make in this trade. Okay, so now you got your theta column that tells you every day that time passes, you're making $5.56. So if I get stopped out tomorrow, I will lose $5.65 less. Okay, good. So we got one trade. Okay, trade of the day number 1. I'm just gonna add a few lines so we can monitor this trade, learn from the mistake, make a few comments. Again, keep in mind what I said. This trade obviously makes sense. If it didn't make sense, I would not have executed it. But at the same time, we will little by little add more rules to make the process of validating the trade to me to be even more robust. Okay, so I got my CRM trade here. I'm gonna disable the UFOs and just minimize it so we can review it another day in another get together session. Okay, cool. Okay, so your turn, guys. Okay, questions. Okay, you've been very quiet today, and I know that when we do get together sessions for longer term, um, it seems that most of you, for whatever reason, are watching these sessions recorded instead of live. So I know that today it's a few of you, and therefore I only had a few questions, which I already answered. But I want to make sure and re-emphasize for you guys to not to be shy, or if you were to watch this recording and you had a question, you can certainly send an email to our email address, which is, let me type it for you, reach at tradewithufos.com. So you could certainly do that if you need to, okay? Good. 1 second, guys. Okay, everybody. So now let's do another one, okay? We got this one in and running. Okay, so we're just gonna leave it alone until the next session. And I would like to go ahead and find another opportunity, okay? And looking at the stocks that we have available here, I would like to look at, let's go for NVIDIA. I remember soon, I'm not sure if it happened already, or it's under 14, so we cannot do it because remember the expiration date is 15. What else do we have? Expedia, what happens with Expedia? Expedia is February 7, okay, so definitely not a good choice for us. What else do we have? EA, Electronic Arts, May 7. Okay, so this is interesting. Earnings were beat on the 5, and the day after, it seems that the options premium in those options still shows some excess of premium. Yeah, so here what happening, this stock dropped so aggressively that everybody got very scared, and therefore the premium didn't really decrease after earnings. Okay, so premium options are quite um, have quite a lot of premium built in, which is good. What's not so good though is that the next red UFOs are so far away that if I was to sell those 94, 95 options, I'm gonna get paid nothing. So in order to not to waste any of our time, I'm just gonna go for the next one. Okay, so what else do we have? We have Lilly. That one is a tricky one because it's a biotech stock, so those stocks can really move fast, and the beauty of that is that that it also implies premium. The bad news, though, is that the premium was reported on the 6th. And remember, options data on TradeStation, to be precise, the implied volatility of the options, that particular options data, it's actually not real time. That number is updated at the end of the day. So on February 6th, the earnings were reported. TradeStation still showed the volatility at that time, but today is the day after. So it's probable, if the earnings reports happen after hours, that that value is not accurate anymore, and therefore I'm just not going to pay attention to Lily. Okay. So the next one I'm going to check Pepsi Cola. It's how do I put it? A little bit of a waste of time most of the times. Pepsi Cola, Coca-Cola, Verizon. Those are companies with AT&T. Those are companies normally with a very little amount of premium. Okay, Philip Morris could have been a good candidate, but has earnings on February 7. WB, WB. I never traded options on WB, so I don't know what to expect when it comes to their liquidity. Let's take a look at the liquidity of WB options. It's a little wide. It's just a little wide. But having said that, you get the amount of crazy premium built in WB. Maybe worth it to check WB. You have seen the other stocks that were giving a 30% value, something like that. WB is like 60 plus, and here's the reason. Okay, if there is a reason for it, you don't want to trade it. Okay, earnings is the reason, so forget about it. What else do we have? W day. So W day earnings on February 28th. Here we may have something. So I'm clicking on W day to load the chart. At the same time, in parallel, the option chain will be loading. I want to check the spreads. They're a little wide, nothing ridiculous. So we may be able to do something, but now the problem I see here is that I got no red UFOs. So I'm wondering if that stock is making all times high. So let's look for the monthly time frame. And yes, that stock is making all-time high, and therefore would not be a valid candidate, because to do non-directional trading, obviously I need red and green UFOs. I need both, not only green. 1 second, guys, please. Sorry for that. So I'm back with you. So SQ. Let's take a look at SQ, and as you can see, as I'm going through the list, I'm moving from symbol to symbol. I'm not necessarily following the sequence from top to bottom. I'm basically, out of my experience as a trader, I'm looking at the stocks with the greatest level of liquidity that I know, because I have traded before many times. So I know I can rely on certain level of liquidity, and leaving the stocks that I haven't traded yet for later, because probably there are newer stocks with less liquidity. So SQ Square Incorporated. Let's see, what is the premium built in that stock? And that's actually pretty good. 167, 130. Yeah. So hey, let's take a look at this, because with that particular stock, let me reload the option chain, because I don't see the top of it, and I want to make sure the data I have corresponds to Square. So based on what we learned, Square has an earnings report happening on the 27th. So I could use expiration date up to February 22nd, if I'm not mistaken. Yep, up to the 22nd. And probably, 15 would be my best, my favorite choice, because it's a monthly expiration date, and probably better for liquidity too. But before I get too excited about anything, let's look at the pre and the post market data to see what's my probability, and it's 45. 45 is my probability. With the regular market hours is 44. So really, that information is relevant. So if I was to look at this distant UFO, and I was to project the distance from here to below, this would bring me here, below that UFO. Okay. If I look at regular market data instead of pre-market data, it's further away from those two UFOs that show on the screen. So basically, I got UFOs from the regular session protected by UFOs from the pre-market session, which is good, and price is more or less in the middle. So that is actually a nice setup for an iron condor. Now, having said that, I need to go back to my option chain to confirm again that I do have the premium I need. So 78, 78, 79, that would pay me like 40, okay, more or less, and the 65, 66, that would pay me like 40. So it's actually looking good. It's actually looking good for a trade. The implied volatility with this expiration date is 58, so it's plenty of premium. Of course, you got more premium on March 1st because the earnings reports are built in, but we don't want to expose ourselves to that. So it's looking like we may have another opportunity with SQ, with Square Incorporated, and this is a trade that we're gonna plan right now. Speed of the light, we got 3 minutes left, so we'll take a little more probably, but we'll plan it quickly so you can execute it quickly as well. Okay, so we have 79, 78. Okay, so the plus sign, in case you haven't guessed it, means buy. The minus sign means sell. Whoop. Okay, and we're gonna be using February 15 expression. Okay, and this is an iron condor. Okay, and we're gonna be sell the 66 put, and we're gonna be buying the 65 below. Okay, and this is my initial plan, which I may need to tweak a little bit using Option Station Pro. Okay, so let's go ahead and make this dark blue so you have a better view of it. And now move into the option chain to right click, analyze an iron condor. Okay, I got 3 data. So the top is 78.19. The bottom is 65.86. Plot should be plot 1. Here we go. Middle is last. Okay, so we have the blue line above, 78.19. The blue line below, 65.86. On the call side, we're gonna do 79.78. On the put side, we're gonna do 65.66. Okay, so what happens if we do that? Well, if we do that, it's not ideal because we get paid $23. Okay, and so again, we need to spend time in doing our sharpening sessions to get deeper into all of this. But one of the rules that we will use is to not do iron condors for less than $50 a condor. So in order for me to gain more premium, I'm gonna have to widen my strikes to 64 and 80. If I do that now, I'm getting $40. Okay, it's better, but it's not what I want yet. So I'm gonna stretch it to 63 and 81, and let's see what happens now. Now I'm getting my 53, so that's what I want. And if I get stopped out above, it's 73. If I get stopped out below, is 62, which is always what we're looking for. A little less pain below, a little more pain above, because of the volatility effect when the markets fall. Okay, so this trade provides a little bit lesser, how do you call it? A little bit lesser of a reward to risk ratio, but this also means that the strikes that we have used are further away. So this trade, again, we will need to go over other rules to make this better, okay, and more quantifiable from a mechanical point of view. But we'll need to do that during the sharpening sessions, not during the get together for longer term. And when we get to that point, you would see that this trade is a trade that you would likely be happy to accept. Okay, so I'm just gonna go ahead and execute it, just like I did before. I'm just gonna click to trade. Okay, I'm gonna get market price, place order, yes. So 1, 2, 3.
Order filled.
I have been filled. If I look at manage, I have my SQ trade, just like before. If I drag things on top of it, I have an iron condor with SQ. Okay, so here's my trade. That's the trade I am executing at the moment. Okay, so I got an iron condor with CRM, an iron condor with Home Depot, and an iron condor with HQ. Okay, so we will conclude the session here, my friends. Let me have a horizontal and vertical line so we can track this later in the future. So give you a proper support with the use of the UFOs. Okay, so I'll just have this like that, just so I can go ahead and copy my chart for future review. Very good. So my friends, a productive session today. We've been going over 2 trades with the UFOs. 2 iron condors, one with Bristol Myers, one with SQ, Square Incorporated. They both met the rules that we know up to this point. One thing I said as well is that we will add a few more rules in the future to make us even better traders of iron condors. We will also add in the future certain techniques on what to do if the Iron Condor does not behave the way we expected. Okay, well, I should not say the Iron Condor. If SQ does not behave the way we expected, so we expect SQ to remain between 78 and 65. The question is, what if it doesn't? Right. So what's going to happen now? Well, then we'll need to talk about what to do in a situation like that, how to deal with it, and there are multiple things that could be done. We will need to talk about all of these too. Okay, so if you are an options trader with limited or no experience, you may want to consider using this trade with paper money and watch from the sidelines and learn from it. If you are a trader who is very experienced with options and you know exactly how to deal with the iron condors, well, I just gave you the plan, so you can execute it and you know how to manage it, right? So depending on who you are, just make sure you stay on the safe side. And next day we will review this and so on. Okay. So quick reminder of what's coming. Sunday, we will get together again. We have a get-together session for sharpening. We will dive deeper into options, okay? So be ready, Sunday, February 10, 9 a.m. Eastern Time. This is 2 days, 22 hours, 55 minutes, and 5 seconds, okay? I'm counting on you, my friends. I'm looking forward to see you there. Get your questions ready. You can certainly also email your questions ahead of time, so that way we can be productive during that one session. Okay, guys? Everybody, you take care. See you soon. Be safe. Bye-bye.